What if Bitcoin's core rules change to recover $5.2 billion in stolen coins? Mark Karpeles, ex-CEO of Mt. Gox, has proposed a hard fork to move nearly 80,000 BTC to a recovery address without the original private key. The plan sparks fierce debate over Bitcoin's immutability and sets a precedent for future hacks. Tether has frozen $4.2 billion in USDT linked to crime, showing how stablecoin issuers now act as gatekeepers for global crypto flows. Most of these funds were blocked since 2023, as Tether worked with over 310 agencies in 64 countries to help law enforcement fight scams and laundering. This move highlights the growing regulatory grip on stablecoins and raises questions about centralization versus security. Crypto mixers are making a comeback, but it's not just criminals who are adapting. Ordinary users seeking privacy are being pushed out. In 2025, Railgun dominates with 71% of mixer transactions, while Tornado Cash drops to 25%, and Privacy Pools holds 5%. Regulatory crackdowns shifted funding away from exchanges to unlabeled wallets, and most mixer activity now happens within 24 hours to avoid identification. Senate Democrats are calling for a full investigation into Binance after reports of $1.7 billion in digital assets flowed to Iranian entities. The probe could trigger regulatory pressure, impacting Binance's BNB token and shaking confidence across the crypto market. Traders are watching for volatility, as compliance concerns and ties to Trump family ventures add to uncertainty. Over 2,000 companies are suing for $175 billion in tariff refunds after Trump's global tariffs were ruled illegal. The potential surge in U.S. debt and deficits could push the Federal Reserve toward easier policy, creating a liquidity boost for crypto markets. Meanwhile, Senate Democrats are calling for a DOJ and Treasury investigation into Binance over alleged Iran-linked flows, adding regulatory uncertainty to the crypto landscape. Ethereum's real-world asset market cap just smashed through $15 billion, even as the crypto winter drags on. In the past year, RWAs on Ethereum have grown by over 200%, fueled by the rapid expansion of asset tokenization. Institutional players are ramping up involvement, cementing Ethereum's position as a backbone for on-chain traditional assets. A record $61 million in USDT was seized by U.S. authorities, exposing the scale of crypto romance scams targeting investors. Homeland Security and DOJ traced funds through multiple wallets, with Tether assisting in freezing assets. This case highlights the growing use of stablecoins in fraud and signals tougher enforcement against organized crypto crime. Senior Axiom employee allegedly used internal tools to monitor users' wallets, raising serious concerns about DeFi platform security. Blockchain investigator Zach XBT exposed audio and dashboard evidence, prompting Axiom to revoke access and launch an ongoing investigation. The incident highlights the risks of rapid crypto startup growth, outpacing governance controls. A single glitch in Lighter's automatic leverage reduction system led to an $8.2 million loss for a major trader. The whale's large ARK long positions triggered ADL, isolating risk and limiting losses for liquidity providers. This incident highlights the hidden dangers of isolated risk pools and ADL mechanisms in decentralized derivatives trading. A hacker minted 410 million CIOTX and drained $4.4 million, exposing major cross-chain security flaws. IoTeX now proposes ending all CIOTX support across networks to protect user assets. The move highlights the urgent need for stronger validator security and may set a precedent for how blockchains handle compromised tokens. South Korea's $1 trillion National Pension Service ramped up its Bitcoin exposure through Strategy Inc., just as crypto prices plunged. The fund's 4 crypto stocks lost about $100 million in value, but NPS continued buying, signaling long-term confidence in digital assets. Both major Korean parties now support direct crypto investment by NPS. Chinese authorities are now directly targeting crypto-based money laundering, spotlighting ringleaders, and cross-border crime groups. In 2025, $16.1 billion was laundered through Chinese-language crypto networks, prompting reinforced bans on trading and stablecoins. Asset confiscation and forced restitution are now key enforcement measures.